Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market balanced within a narrow range heading into the NFP report. And now that the non-farm payrolls out of the way, so far the buy side has been active. Now on the upside here, we have resistance at 66 to 68, followed by the high from last week at 69.5, and then finally the all-time high at 72 to 73. So off the open, we are going to need to see broad market strength and sustained upside momentum in order for the market to take out the 66 to 68 resistance and head any higher. And then of course 72 to 73 is going to be a important area since it marks the all-time high. And again, we're going to need to see sustained and persistent upside momentum and participation from the other markets in order to continue going higher. So our short-term bias heading into the open is neutral, since the market can still tip to either direction, and we know that we have to see particular things in real time in order for the buying to continue, because we are at important resistance here. On the downside, a break below the overnight low of 61.5 would signal sellers now gaining control, and from there we can quite easily go right back down into the 52 to 54 support area and fill the gap at 52.5 and the naked VPOC at 52. Technically, responsive buyers can be active still on the first push right back down into 52 to 54, but it is going to depend on how the market approaches that zone and what the real-time situation looks like. Because even though we can get a reaction at 52 to 54, if we're going down on excess weakness or a lot of downside momentum, we're going to have to determine if there is sufficient reward to risk to justify going long anymore. Because if the market fails at the initial resistance and then breaks down from the overnight low, then the high of day could potentially be in. So then we have to question, is the target going to be good enough off of 52 to 54? Below 52, we have supported 42.5 to 45, and the current week's low at 39.5, and then support at 36 to 38, and those are still areas where responsive buyers can be active. So short term, how the market resolves this overnight balance is really going to be the tell. And so far, the reaction has been to the upside off the NFP report, but we know that since the market is at important resistance, we're going to have to see that momentum and broad market strength after the open in order for the market to go higher from here. And then beyond 72 to 73, in the event that we break out, there is no reference level, there is no hard resistance. At that point, it's really just about where the range gets exhausted, or where the market just kind of runs out of steam. But we are at decent resistance, so we do have to be cautious on the long side at these higher prices. But at the same time, if we are seeing persistent upside momentum, then shorting the market up here is going to be risky as well, simply because the market may just balance at these higher prices. So that's how ES is set up going into the open. Let's see how the market responds to the initial resistance zone, the 61.5 overnight low, the 64.5 high volume node, and we'll take it from there.